Hi there, welcome to Kneppy Invest and welcome to January 9, 2024. There's about 47 minutes left of trading today, and I'll probably categorize today as slightly disappointing. I didn't expect a really good day because the lead-in from Wall Street was slightly positive. All the major indices there were up. Nasdaq was only up 0.04%. I'm pretty sure Dow Jones was up 0.25%, and S&P was up 0.16%. So I didn't really expect a significant down day, and I think it all depends on what you define as significant. So we are down a fair bit. Again, depends on the definition of fair bit, but I think I'm saying that because I didn't expect us to be down this much. So XJO down 0.45%, small caps down 0.81%, and tech down 0.63%. I did expect a little bit of a better day, so slightly disappointing. Now, I've been away for most of the day, ever since about 30 minutes after market open. I've been out of the house all day, getting my new license. Every 10 years, you have to go to the transport office, what they call it, Department of Transportation and something, to get your new photo taken because we aged. So that happens every 10 years, and today was that day for me. That one day in the decade for me. And then because I had to drive a fair way to get it, for some reason, they decided not to put a Department of Transport office in a 50-kilometre radius, it seems like, even though in some locations in Brisbane, they have offices almost right next to each other. So those who are in the northwest have to drive a little bit. So I thought, why not make a day of it? Maybe not a day, but a morning of it. So I did some other stuff, went to Indoor Rapilli shopping centre, that sort of thing. And then I came back, watched a little bit of TV, and then about 15 minutes ago, I had a look at what's happened on the markets today. And the first thing I noted, and this was actually before I left, the first thing that was really obvious was a dearth of announcements today. Not interesting announcements, a dearth of announcements. Only 29 events, price-sensitive events, released today. But within this, there were quite a few interesting announcements. Not only today, also last night, there was an interesting announcement from Star Entertainment Group. And by the way, that is the stock of the day. I've already recorded that video. But within these 29 announcements, there were some interesting announcements. So I have come up with the top 5 stocks of the day, which I will go through. In fact, there is one company that did not release an announcement, but the share price of that company is down 12% because of an update from UBS, sort of like a downgrade. And I still don't understand why people buy and sell on the back of broker upgrades or downgrades. It doesn't make sense to me. It just doesn't make sense. It still blows my mind that people will buy and sell because of a broker update. I'll talk about why when I get to that particular company, which by the way is Lovisa. Okay, so let's start today's video looking at the indices and sectors. And by the way, it's been, we'll say, flat. Nothing really has moved the market up and down today. By the way, before I forget, a couple of interesting things in regards to Australia, economic news. Australia exports hit 9-month high, and Australia retail sales growth at 10-month high. I don't think that's that exciting because when you think about it, what happened in November, a lot of people do their Christmas shopping in November, particularly the last week of November around Black Friday because things are on sale. So that's not a surprise that it's a 10-month high. You probably expect that. What I would like to see if it was like a 10-year high, that would be exciting. 10-year high in retail sales, but obviously that's not where we're at. All falls for second session. Anything else interesting here? China inflation rate hits 9-month low. Again, that's not that interesting, but that probably does mean inflation is on the downtrend there. Okay, back to the market. Let's have a look at a bit different sectors and indices. Utilities, only sector up. Everything else down. And the worst performing sectors include energy, staples, and industrials. Much to talk about there? I don't think so. What about year to date? Financials, real estate, energy, healthcare, all up by over 2%. Staples, down 0.51%. Not sure what we can read out of that. I would say Staples is full of quite defensive companies. Let's have a look. There was a question about my definition of defensive. And defensive, my definition of defensive is simply cyclical or non-cyclical. So defensive would be non-cyclical. And I always think of defensive, non-cyclical companies as being low growth companies, which is probably unfair to some companies. So let's have a look at some of the companies within this staples. And I would classify Woolworths as defensive, Coles defensive, Treasury Wine. Yeah, I would say the drinking alcohol would be non-cyclical, so defensive. And Endeavour Group is an interesting one because they do have hotels, and I would say less people go to hotels, eating out when times are tough. So I'd say that's less defensive, but they still do sell alcohol, that sort of thing. A2 Milk, yeah, I suppose the buying of milk or the consumption of milk would be not that cyclical. Metcash, Bigger Cheese, Grain Corp, Elders, yeah. So a lot of these I would classify as defensive. And again, when you look at most of these companies, I would not classify these as high growth companies. I'm trying to find one here that I might classify as high growth. And you notice there's a lot of food companies, which makes sense, which does make sense. It's just the way we eat food. We all have to eat food, but just the way we eat food. And more than likely, when times are tough, we eat out less and eat in more. So you can actually say Woolworths and Coles and Metcash could be benefiting from when times are tough because more people want to maybe, I was going to say make their own, yeah, I was going to say grow their own food, but make their own food. So anyway, I should actually discuss that when I answer that question, which I've decided I will do in a standalone video. Anyway, rambling on enough. Gold's had a good day. Go Gold. I wonder what's Mika Gold is doing today. Let's have a look-see. Mika Gold. Oh, it is at 10 cents. So I've mentioned quite a few times that 10 cents is an important level. The high for Mika is at 10.5. It wouldn't be surprising if it just struggles to get above 10 cents for a while. And then when it gets above 10 cents, it will stay above 10 cents. And you wouldn't be surprised. I wouldn't be surprised to see it go on a run. So Mega Metals at 10 cents or right on 10 cents. Ooh, you can see not much volume at 10 cents. So I'd say the share, yeah, look at that. The share price is now at 10 cents. Share price, I'd say, is been oscillating above and below 10 cents all day because 10 cents is a significant level. And just by the way, look at the amount of orders or sells at 10.5 and 11 cents. So people buy when it's below 10 cents and then put the sell order just at 10.5 and 11 cents. I wouldn't call it pip trading, but I do know a lot of people actually do that, which is interesting. So there is a bit of resistance within the next 1 cent. It's just 1 cent. It's still a 10% rise if it gets to 11 cents, but still 1 cent. Okay. So let's have a look at the top gainers and top losers. We'll start off with the top gainers. I'm trying to think if any of my companies in my top 5 might be in this. I would maybe one. So I think most of these companies would be surprising if, and we're seeing very low turnover here. So really low turnover. We're getting some good turnover once we get to VRX Silica. Did I see VRX Silica in the announcements? I don't think I did. Oh, we did, yeah, at the top. VRX Silica, EPA recommends Arrowsmith North Development Proposal. I released at 12:30 p.m. I don't know anything about this company except they're in silica. VRX Silica. All I did is I noticed this was at the top of the announcement list. Go Brain. I just sort of went, VRX, that does sound familiar. I'm not sure how significant this is for the company based on the share price. Oh, they actually said here, significant step in the environmental approvals process for Arrowsmith North. There you go. Let's have a look at the About section. Apparently, this is the most advanced pure play silica sand company listed on the ASX. The most advanced. There you go. Developing its 100% owned silica sand projects at Arrowsmith and some other places as well. Silica sand is the most used commodity on the planet after air and water. There you go. The most used commodity on the planet after air and water. That's very interesting. This is the first time I've really looked at this company, and the share price is up 18.6%. This should have belonged in my top 5 stocks of the day. The only reason it's not is because they released the announcement fairly late, and I completely missed it at 12:30 p.m. So let's have a look at the chart. Ooh, I see some like share price in a downtrend. Looks like an interesting announcement maybe on the 30th of September. Share price on that day rose 44.83%. And notice what happened after that. that really big rise in the share price. The next day, the share price did drop a little bit, 19%, but that was the floor. And then the share price rallied back up to where it started. And then on the 18th of November, share price rallied another 25.64%. Share price rallied and then pulled back, and we've seen another rally. Unfortunately, we have seen a little bit of selling today. Share price as high as 6 cents, has pulled back to 5.1, and it should be quite obvious why the share price has pulled back, why there's been a little bit of selling today, because all these shareholders who bought back in November at high prices consider this company as dog stock because the share price then fell once they bought. And that is the mindset of a lot of investors. They expect to see the share price rise as soon as they buy in. And if it falls, it's a dog stock. It's a dog stock. I've got to get rid of it as soon as it gets back up to the levels I buy. That mindset is quite rampant on the ASX. And I have heard quite a few people say that. People I work with have said that. A few people I work with have said that. Anyway, so that's why we've seen a little bit of selling. So there is a little bit of resistance between 5 cents and we'll say 6.5 cents. So definitely gets to 6.5 cents. That will be quite positive. For VRX Silica, markup of this company is, according to TradingView, about $30 million. So after the rise today, we'll say about $40 million. Or maybe not that much. That would be 33% rise. We'll say $37 million. There we go. In fact, market index will tell us $37 million. I was right. Go, Michael. Go, Kneppy. Okay, so that's VRX Silica. And by the way, I was going to put this on my watch list because I do think this should is a powerful word, but I would like to follow the movement of this company's share price moving forward, and I really like the volume today. What else do we have here? A company called Arica Resources. I have never heard of this company before. I had heard of VRX, but Arica Resources, no. And yesterday they released expansional drilling recommences at pennyweight point. I would have completely ignored that. The share price did rise. Let's have a look at the chart. Maybe the chart is interesting. Arica Resources. To me, no. Looks like they've gone through a consolidation back in August, September. And you just notice the difference in the charts before September and after. So that's a consolidation. Okay, what else do we have here? Vection Technologies. I'd say the chart for this one is looking really good. I don't think the company has released any announcements, no. But the chart for this one is looking quite nice. I'm not sure why there's a lot of interest in this company all of a sudden. I'm going to say all of a sudden. There was no interest in this company for the majority of 2024. And then interest turned around in October, and the chart looks splendid. Absolutely beautiful chart for Vection Technologies, up to 4 cents. And what else do we have here? Nothing. Oh, Integrated Research, nice little bounce, but we can move on. And top gainers by markup. We have, Callus Metals did release their quarterly update or something. And I didn't really think there was anything that positive in it, but I could be wrong. So I did actually look at this one, an update, and they did mention everything was going to plan. So on track to meet guidance of 105 to 120,000 thousand ounces. Yeah, that K just got me there. Of gold at ASIC all-in cost of 2,300 to 2,500. So it looks like things are moving in the right direction. Gold or cash and bullion have increased by 26 million. And let's have a look at the chart for catalysts. I'm a little bit surprised the share price is up that much. It's also gold as well. Gold prices have gone up. So this could be interesting. We have seen a pullback, and maybe the share price is starting to turn up again for Catalyst Metals. What else do we have here? A few gold companies. MTM Critical is another good day, up 7%. But, Hazer Group, there it is. Most of the companies in my top 5 stocks are down significantly. So I thought I had to include one company whose share price is up. And I'm really happy Hazer Group is up 8.57%. Not the sort of announcement I would usually get excited about, but it's all I had. Apart from VRX Silica, maybe that should have been in the top 5. Now let's have a look at the top losers. And we're going to see plenty of the companies in my top 5 in the top losers. That's my prediction. I would not be surprised to see all 4. In fact, coming in at number 1, number 3, we have 2 of the companies in my top 5 stocks. And I see another one down the way here. Westgold Resources, I cheated with that one, by the way. And Vita Medical's going to have another bad day. And Lovisa, there's Lovisa. So all four companies, apart from Hazer Group, that are in my top 5 are in the worst performing companies of the day. NTAW Holdings, which is National Tyre and Wheels, down 32.69%. Top 5, talk about that. Star Entertainment Group is the top stock of the day, down 28%. Talk about that. Well, briefly talk about that in this video, and then you can watch my standalone video. There are definitely concerns about that company moving forward. Westgold released their update. I'm a little bit surprised it is down. I think I might have missed something. And Lovisa is the interesting one. They did not release any announcements today. So I'll talk about why the share price is down 12% for that particular company. A company I do think has the potential to grow significantly over the next 5 to 10 years. Okay, so let's have a look at top losers by market cap. GQG down 5%. Still a fair bit of negativity around that company. Appen, Drone Shield, Satire, Demeric's down. Oh, would have rather that to be up. Findy down 8.6%. I have a feeling this chart is looking really bad now. Yeah, this is definitely bad. I'm really glad I got out of Findy. So I took profits a while ago, and I was just holding on to the rest. And then I saw this massive down day on the 29th of November, followed by another down day. Share price did not rebound, and that was a really negative sign. Did not rebound, and then I decided to get out when it was pretty obvious the share price was not going to rebound. And then we've just seen the share price plunge. We've seen a move cross over the moving averages, and this does look really negative for Findy. So definitely good times, in my opinion, have come to an end for this company, just based off the chart, nothing else. Anyway, so let's go to the top 5 stocks of the day. And we'll start off with Hazer Group. Share price up 8%, hopefully still up 8%. Oh, it's up 7.14%. Hazer awarded significant IP patent in Japan. It's not the sort of announcement that will really, draw me in. So, for instance, Mika Metals yesterday drew me in with an announcement. I had a closer look at the company. I liked what I saw, and then I took not spontaneous. What do you call it? Starts with S. Not a planned position in the company. There is a word for that. It's not spontaneous. There's another word. Anyway, so this is not the sort of announcement that draws me in. Awarded significant IP patent. So what? The market's liked it by 7%, but I do think this company is intriguing enough to have a closer look because they're dealing with decarbonisation, that sort of thing. So, in fact, if you look at the About section, they do mention driving global decarbonisation efforts with the commercialization of the company's disruptive, world-leading climate tech. So I think it does deserve a closer look because this is the company that might have the ability to thrive over the next 5 to 10 years. And I think this sort of company will thrive. Oh, I shouldn't say it will thrive, but companies like this will thrive in the next 5 to 10 years. So that's one reason to have a closer look at this company. But this is not the sort of announcement that will draw me in. I need something more of substance. Anyway, so I suppose it's a good thing. It's not a bad thing. At least it's not a bad thing. That's probably what I should say. So let's have a look at the chart for Hazer Group. Is it getting interesting? Well, sort of. Share price is in a downtrend. Now, you get a lot of false breakouts with this company. We've had 1, 2 in the past, in 2023 and 2024, but overall share price is in a downtrend. If you look at the weekly chart, share price still moving down. I'm not certain we're in an uptrend for this company. I need a little bit further proof. The good thing here is share price has been going sideways for a while. These other false breakouts, share price was sort of like a V-shaped recovery. We didn't see any consolidation period in either one. It's like down and then V-shaped, down and then V-shaped. Here we did see sort of a V-shaped, but then the share price has been going sideways. So I do like this chart setup a little bit more than the previous time. So the chart is looking better right now, but it definitely isn't bullish. Definitely no uptrend with Hazer Group. So really, the only reason you might take a position in this company right now is if you're fairly bullish and you're confident about the future of this company. I would still say it's a story stock. Okay, so that's Hazer Group. The only positive story or announcement or whatever in the top 5 stocks of the day. Now on to National Tire and Wheels. They decided to change the name of the company from National Tire and Wheel to NTAW Holdings. Not sure why they did that, because their name sort of perfectly describes what they do. Down 34.62%. And this is another chart that looks horrendous. And the reason why it's down 34.62% is because they received notice of termination of Dunlop distribution. Now, they did mention in this, by the way, they did withdraw financial year 25 guidance less than a month ago. So that's not positive. So this is, and also looks like they won't be able to cover their bank financial covenants. So that's why the share price, not that long ago, fell a lot. 18th of December, share price dropped 40.3%. So this is the second time within a month the share price has dropped by more than 30% in one day. So they lost, well, maybe not lost, but they, Dunlop, whoever, someone terminated their Dunlop distribution deal. And I have a feeling, if I remember correctly, Dunlop was bought out. Received notice of termination of Dunlop distribution agreements from Goodyear. Oh, that's right. So Dunlop was owned by Goodyear, I forget, I don't know, following sale of Dunlop brands. So Goodyear owns Dunlop, and then they sold Dunlop. Anyway, they do mention here, though, so maybe if you're the positive sort of person, the optimistic sort of person, they do mention here somewhere, if I can find it. Oh, yeah, here it is, this paragraph right here. Received termination, blah, blah. The company is reviewing the notice of termination, noting that the notice of termination are expressed to be effective only if the Dunlop sale agreement is completed. So there is a possibility the Dunlop sale agreement is not completed, which they won't lose this contract. So there is some possible positive outcomes moving forward for National Tire and Wheel. I also know, I think if you listen to Oz Call, this quite a few months ago, Koshi was really positive about this company. He was positive about this company because one of his friends was positive about this company because as we electrify our cars, they're heavier, so they go through wheels more. So that was his thematic. And unfortunately, if he did take a big position, Kochi's friend, he's down a fair bit because let's have a look at the chart for National Tire and Wheel, NTD. I was thinking of taking a trade position in this company back in March. There was a nice little support level at 50 cents, right on 50 cents, and we started to see a bounce at 50 cents. And the share price went from 50 cents back up to 8.64 cents. So that was a really nice 30% return in a fairly short period of time. That's just because it bounced off a support level. And that support level was fairly strong. I wouldn't say massively strong, but definitely strong that I expected to bounce. But I wasn't brave enough to do that. And I'll be honest with you, I don't like those trades. They can be quite successful at times, but I don't really like them. And I just decided to stay out of this one. And then it didn't take long before the share price broke below 50 cents. And that was on the 17th of May. And that was really, if you had a position in that company at that point in time, that was the get out sign right there. And the share price just kept on dropping slowly. And then they had that really bad announcement the other day, 18th of December. Share price dropped 40% on that day. And then another one. Now another one. 2 big down days in a row for this company. If you look at the weekly chart, the last time the share price was at 17 cents was way back during COVID-19. In fact, the low during that period was 20 cents. So this is the worst it's ever been for this company. It's been as high as $1.60 back in early 2022, but possibly, if you look at this chart, you could say, well, it's a pretty good upside for this company. We're talking about a 10 bagger as a potential upside if the share price does what it did in 2020, 2021. Maybe, I don't know. Not for me at this point in time. I probably need proof that this company is turning things around. And that proof may never happen. So that's National Tire and Wheel, or NTAW Holdings. I just wish they didn't change their name. Now on to Lovisa. I actually did see the share price down. It was down 12% earlier, down 10.44%. I was like, what's happening here? So I dug a little bit deeply, or not that deeply. It was really easy just to Google. I just Googled Lovisa. And in fact, let's do that. Lovisa. In fact, I gave it away there. Lovisa UBS. So Lovisa. And I think what I did was Lovisa ASX. And you get all these little news articles, and then cover brief. Lovisa shares dive as UBS flags slowdown in store openings. So this was a downgrade from a broker. That's it. It's like, why? Why do people react to this? Ridiculous. So I actually found this site, UBS site, looking at, there's no explanation why, but just looking at Lovisa Holdings or UBS rating and price target history chart for Lovisa Holdings. They change their price target every 3 months or 2 months. It's ridiculous. They changed their rating 5 times in 2024, up and down. And if you look at it, they seem to increase their price target if the share price is going up. They tend to decrease their price target if the share price is going down. And I've seen that a lot because brokers look pretty stupid if they have a target price that is well above or well below the share price. They just need to or have to decrease it or increase it to get it more in line with the share price. So they've actually decreased their target price from $29 to $27. And funny enough, they put a sell rating on it at $27. And what's the share price? It's $26.77. So they should change it from sell to now buy because it's below their target price. So I just find it really weird that people will look at these broker reports and then just make decisions based off them. I'd like to see any sort of proof that you could benefit from these broker reports. And when I say, I'm not talking about one day, I'm talking about over the next 6 months. I just wonder whether there's any benefit from even looking at it. That's just my opinion. So anyway, that's why Lovisa is down today, because UBS put out a downgrade. And let's have a look at the chart. It has affected the chart, by the way. So you have a look at the daily chart. Now, if you have a look at the weekly chart, it's still in long-term uptrend. It's not under threat. In fact, if the share price gets to about $23, that would be a significant buy for Lovisa because that would be the uptrend line, which goes all the way back to the bottom of COVID-19. So let's have a look at the daily chart. Daily chart, a little bit more negative. So we didn't want to really, well, this is a support level right there. So what I'm going to do is get rid of this solid blue line and put this line right about there. There's a couple of reasons why I put it there. If you go back to the start of 2024, you can see the share price started to move in an uptrend in late 2023. We saw it get to about, what price is that, $26, and then pull back. And then all of a sudden, on the 22nd of February, probably when the company released their results, share price took off and broke above that level. And then we saw the share price bounce off $26 on the 22nd of November. It was a beautiful bounce. And it seems like there is potential the share price is bouncing off that level today. Yeah, we see the low today has been $26.01. And people say technical analysis doesn't work or resistance and support levels don't work. There's proof here, almost proof here that it does work. We've seen now twice in the past 2 months, share price bounce off $26. And there's just a psychological level. It's known, maybe subconsciously, that $26 is important. It's a support level, and we see people buy off it when it gets to that point. Anyway, so that's Lovisa, and that's the reason why it's down 10% today. Now on to Westgold. Okay, I sort of cheered with this one. They released their group production lifts in Q2 financial year 25 announcement. I had a look at it because there was nothing else to read on the ASX today. And I didn't come away from it negatively, thinking negative thoughts about Westgold. And a lot of times it's easy to understand why a share price of a company might be up or down in a day. It's sometimes really easy to understand why. So National Tire and Wheel, easy. Star Taylor Group, easy. What else? Like yesterday, what else? What did we see yesterday? Avita Medical, easy. MTM, yeah, pretty easy. Mika, yes. QGQ, yes. And Orthocell, why the share price of that company was up? Yes, it was pretty obvious. I went through this and I came away without any negative vibes at all. Even the commentary from the management, There's nothing negative there. In fact, the CEO says financial year 25 saw Westgold continue to optimize expanded post-merger business, production increase whilst we continue to heavily invest in the long-term capacity of our mines. So obviously there is something in this that I missed that the market didn't like. Yeah, I must have missed something. I can't see anything obvious right now. What thing you could do is just go Westgold ASX, for instance, Motley Fool, or maybe that's the same article. Looks like there was only one bit of article released today. So let's see what Motley Fool said. Motley Fool said, in fact, they're just talking about the update. It's in the final sentence. It seems that some investors are doubtful that it will deliver on its target. Okay, maybe that's it. I don't know. They just said it seems. I think they're scratching it. They don't know either. Maybe another thing you can do is go to Hot Copper, look at some Westgold resources threads on there. I'm not going to do that, by the way. But I just don't understand this one. Then I saw the share price down. I was like, I must have missed something. Anyway, so let's have a look at the chart for Westgold, WGX. By the way, if you do know why, I'd love to hear why. There's probably something I'm completely missing. But yeah, the chart is in an uptrend. I'm going to actually do something right now. I'm going to do the weekly chart. No, actually, I could do this just with the daily chart. Let's have a look at the lows here. Doesn't really line up perfectly. In fact, maybe the weekly chart will be better. It does. It gets close to lining up. Yeah. So what I'm doing there is I just have the low here and then the next low. So I just line those two up and then I just extend it. And the share price got fairly close to the uptrend line on a couple of occasions, but not quite there. So it doesn't have to be perfect, but there's definitely an uptrend for Westgold. And right now the share price is on that uptrend line. So this could be a sneaky buy at about $2.54 because it's right on that uptrend. And then if it falls below $2.54, you could just say, well, that's a sell. Interesting price where Westgold is right now. And the chart is interesting. So that was not planned, but I did see a bit of an uptrend or potential of an uptrend there just by looking at the chart for Westgold. But that's a weekly chart, daily chart. Yeah, you can just see it. Share price actually has bounced off that slightly. So interesting price for Westgold. Probably the other thing I should mention here, there is a bit of support level also just below where the share price is now. That's the old lows we saw back in October. Okay, so that's Westgold. Coming in number 2, and I still don't know why it's down. Maybe I'm missing something. The obvious stock of the day is Star Entertainment Group. They released the announcement that caused the share price down 30% last night or evening. Update on cash and liquidity, 6:38 p.m. Probably thinking the market would miss the announcement, but the market misses nothing. I saw it, and if I saw it, a lot of other people saw it. I think this is definitely an announcement that does lead to questions about the viability of this company moving forward. And I would suggest or say the only reason you'd own Star Entertainment Group right now is if you are risk averse. If you don't like risk, if you're nervous, like overnight, you can't sleep because you have a holding in Star Entertainment Group, why would you be holding this company? I do own some shares in Star Entertainment Group. I'm going to maintain a holding. I don't care if I lose a little bit of money. It's not a lot. My holding's not big. My initial position in Star Entertainment Group was fairly small, and I was going to build on that holding if I saw more evidence things were turning around. So obviously that trade has gone negative, and there is a potential, a slight chance, that eventually Star Entertainment Group will turn things around. What likelihood is that? I don't know. It could be 50%, 90%, 10%. But there's definitely a scenario at play where Star Entertainment Group does not what's the word? How do I say this? There is definitely a possibility or a scenario. So if you're talking about all these different paths moving forward for Star Entertainment Group, there's definitely one path or maybe numerous paths that just end for this company. Maybe they get taken over, that sort of thing. I suppose if they do get taken over, the share price might go up a little bit, but there's a lot of paths where it just ends, just abruptly ends, and you won't know when it's going to end. It just happens suddenly. They will go into a trading halt and something bad is just around the corner. So there is definitely that possibility at play. So if you are nervous about your capital in this company, I would seriously have a look at that holding. I'm not nervous. I can handle it. So that's just me. Okay, so let's have a look at some of your announcements. Not announcements, comments. So 923 has talked about why he thinks there might be a recession or a crash in 2025. Let's go through these. Why not? I think it deserves a little bit of a talking to. Inverted yield curve. Yes, historically, whenever the yield curve inverts, we do see a recession thereafter. Is it still inverted? I have no idea. Inverted yield curve. Let's have a look. Inverted yield curve chart. Here we go. Federal Fred. Oh, it's uninverted. There we go. It uninverted towards the end of 2024. So it was inverted for a long time. I'm not sure if there's if that means anything. I have no idea. It has uninverted. I have a feeling that they have never gone to recession when it's been inverted. It has to reinvert or lose its invertedness for a recession to come. So usually there is a time lag. So who knows what's around the corner? So Sol 923 is absolutely right. That does mean there's a chance, a good chance, historical chance, that there will be a recession. Now, it has happened a lot in the past, all the time in the past, but that does not mean it's absolutely going to happen. And there are some people out there, some experts who think this is a little bit different, which is probably the most dangerous words to say. This time is different, is dangerous. So I have to agree with Sol 923 on that one. But again, it's been inverted for a long time, which may not mean anything. 2, the rise in fraud is at all-time highs. The amount of crazy valuations is pretty widespread, to name a few. MicroStrategy, Kavana, Fartcoin, yeah. Don't get me started on that. I would also put Commonwealth Bank of Australia in that. I think that is insanity in the market right now. And I would also say that's actually is a good sign. Rise in fraud, that sort of thing, a bit of hype, bit of FOMO, definitely fuck. I'm not going to talk about that one. But anyway, I'd say that's valid. Question 3 or point 3. The consumer is stretched so thin they're using credit to pay everyday needs and buy now, pay later, which could very well be a bubble in itself. Yes, but not every consumer is stretched thin. There are some consumers who have lots of capital and they're using that capital, they're buying, and I'm talking about retirees, they are still spending like there's no tomorrow, and people will increase their credit. They'll get more and more into debt just to keep their lifestyle going. That's a pretty sad thing. I would never suggest anyone doing that. I believe 100% stay within your means. Never use credit to pay for things you don't need. I think credit should only be used if you're desperate. And I don't think people are that desperate just yet. I know that's one of the reasons why I would never use buy now, pay later. I just don't need it. Anyway, so I think there is definitely some credence to point number 3. And typically, if consumers don't spend, that's bad things moving forward. And if people are stretched too thin and eventually they say, we can't spend this, we have to limit our spending, that will harm the economy. So I don't think I am in any way even close to the typical Australian out there. I have no debt. I am not struggling, no debt. I work part-time, and that part-time pay is enough for me to survive fine. But I am not the typical Australian. So I don't know how bad it is out there. I'll be honest with you. I just don't know how bad it is out there. And we saw consumer numbers come in and they were up in November, but does that mean anything? They might collapse any month now. Point 5, you had no point 4. Point 5, the top US companies exposed to the AI trend have to pull off insane growth, which is seemingly less likely as discoveries are tapering off and use of AI. Doesn't seem to improve top-line growth. Rather, it just helps companies reduce cost of goods sold, and you can only go so far with that. I actually will push back on this a little bit. I think some of these AI companies or tech companies are actually undervalued, if anything. Alphabet, I think, is undervalued. I don't even think NVIDIA is that overvalued. And I'm a big believer that AI will transform the way we live over the next decade. Just because it's not really happening now doesn't mean it's not going to happen. There was a CEO who said what they're doing with AI means they'll never hire another person again in their lifetime. That's because they've discovered what they can do with AI and they just don't need humans anymore. So I do think once we move forward, we're going to see applications of AI being used more and more. We're going to see significant advances in AI. Robots are coming, that's without doubt. Individualized robots. The potential for like NVIDIA just in automation, auto vehicle automation is massive, absolutely massive. And I think AI could, I wouldn't say save humanity, but AI has the potential to transform. And remember, everyone's talking about productivity. How do we get all these productivity lifts? How do we increase productivity? AI. And I think this is going to be the most significant revolution in human history when it comes to AI. I think in 100 years, the way we live is going to be significantly different than how we live now. And if you compare how we live now to 100 years ago, I think it's going to dwarf the differences between how we live in 100 years to how we live now. So I'm a big believer that AI will transform us. And I don't think that some of these companies are overvalued just yet. I don't think NVIDIA is overvalued because the potential of that company is massive. And Alphabet, massive potential, yet it's has a PE ratio significantly less than CBA, which is insane for me or to me. Anyway, so thank you for that, Sal. If I had to, and I also think, what happens with the Trump presidency? If he follows through with all his promises, all his threats, tariffs, if he just blankets tariffs on all countries around the world, if he has mass deportation of illegal immigrants, and if he significantly cuts government spending, we are going to see America move into a significant recession. It is without doubt they'll move into a significant recession if he follows through. I'm not certain he will follow through. I think a lot of this is just talk, just threats. He wants to show that he's a bully. He's trying to bully his way to getting what he wants. But if he does follow through, America will move into a significant recession, and that means we will follow them. I have no doubt we will follow them if we do. So it's going to be really, really interesting to see what happens when he gets into office again. So a lot of uncertainty. That's probably the one way I'll say. One thing I'll say. Yeah, one thing I'll say is a lot of uncertainty. But that's probably true for every single day when you're talking about the future. Thank you, CV. Thank you. Stu Percy says, not far off retirement, so I keep a larger portion of cash on the sidelines than I would when I was younger. I think actually one of the things I'm finding with myself as I get a little bit older and older is I am becoming a little bit more risk adverse. Obviously not with Stein and Tamer Group, and it's all about protecting your capital. And if I do see signs that we are going to see a significant drop in the market, and I think there will be signs, then I will move more to cash. And I've just naturally increased my cash levels over the past, would be 3 months or so. And the other thing to pay attention to is what are insiders doing? And insiders are selling en masse. I should see if I can find any sort of chart about insiders. Buffett is at his highest cash levels at his percentage of his total holdings, I believe. So there is signs out there, just when you look at what insiders are doing, that maybe there is a bit of a correction coming. Maybe. Okay. Oh, thank you, Happy Now. Very welcome. Okay. Paul Nichols has told me that he's told me about MTM. There you go. I should do a standalone video on NTM. Oh, yes, Dani ears a stone around GQG's neck. Yes, I was, for some reason, I was just thinking a dares, but it's not a dares. And it's just because the first two letters of both companies are the same, Adani. Oh, Gazmo. This is an interesting one. Gazmo. Thoughts on PepsiCo starting to look interesting. You know my favorite drink is Pepsi Max. I've got some Pepsi Max in this right now. I do not like Coca-Cola. I do like Pepsi Max. Only Pepsi Max. Any other Pepsi? No. It's really weird. I don't like soft drinks except for Pepsi Max. I don't know why. It's weird. Anyway, so why is PepsiCo looking interesting? By the way, I have taken a position in PepsiCo. Yes, I've taken a position in PepsiCo. And there's reasons behind it. PepsiCo. So we're not talking about the drink, we're talking about the company. PepsiCo. So the share price has plunged recently. And it looks pretty ugly, the chart. But if you have a look at a really long-term chart, in fact, what I'm going to do now is do something. One of the reasons I took a position in this company right now is I'll show you this. Here we go. No, that's the weekly. Yeah. So this is the weekly chart for PepsiCo going back to 2012. And since 2012, the share price has been a pretty good uptrend. In fact, if you go all the way back, as long as the chart goes, it's been an uptrend. So what I would be looking for, or what I was looking for with PepsiCo and a lot of other companies, is whenever I see the share price drop below the 200-week moving average, and it does it on occasion, that's a good buying opportunity. So, for instance, if we go back to 1994, it dropped below for a brief period at about $14. It did it a few times in late 1990s, early 2000s. It did it during 2002. Did it during the GFC. And since the GFC, it's done it once for like a few days, maybe, in 2015, did briefly in 2018 during the COVID-19 financial panic. And you can see it, share price has bounced off this moving average, 200-week moving average a few times in the past 1 year. And then all of a sudden it's just dropped significantly, just dropped like a rock. I think, just my opinion, that this was a buying opportunity for PepsiCo because the share price has fallen to good value. I think there's a good value here. I wouldn't say it's expensive. The company's still growing and a nice dividend yield as well for a company that's listed on the Nasdaq. So I just saw this as a buying opportunity. So I'm hoping that's what Gazmo is saying. We have seen a share price drop, and this could be a buying opportunity for a high quality company. And I would say PepsiCo is a high quality company. That's just me, though. Oh, by the way, I haven't taken a big position, just a smaller position in PepsiCo. Okay. Oh, so your Frenchman has done this for me, according to this. I'm going to see if this lines up with what I've got. Let's have a look. Oh, no, it doesn't line up. I think you've missed some. You've missed some. Anyway, I'll go through that. That looks pretty good. Good work, your Frenchman. Okay, so Happy Now does have a question here. I have a technical question. On your chart, you have the volume in like a blue option over your bar chart for volume. Wait there, let's have a look. MTM. Oh, okay, I see what you mean, yeah. So yeah, there's a blue chart, there's a blue, that's average. That's just an average. So I could put a line there, but I've just made it a little bit more standing out. So that's just your average volume. So I'm thinking that's what you're asking about. You have the volume in like a blue option over your bar chart for volume, like a wave, which is much easier to see. How or which option is that? Many thanks again for your help and efforts. Yes, that's just volume. And how did I put that there? I'm wondering if I just dragged it from the main chart and put it onto that. I don't know. I did that a long time ago. Oh no, I've got it in here in the volume, the style, inputs. Oh, show moving average. There we go. It's in the inputs. For some reason, I thought I dragged it there, but in the inputs and volume, you can show the moving average. There it is. And volume. Oh, I just made it. Yeah, then you can change it to a line. And you could probably increase the line, but I just like the area because I can see it much better. So yeah, there we go. That's how I did it. Fairly easy. Demerits. Okay. Bill, for V, thanks for the updates. Also got in MEK at 94 cents on open. Can you please share that position size and also a rundown on your stop loss limit? I'm trying to be more like Kneppy with my trades, relaxed and patient. Woosah. I have some day trading habits and need to get out of type stop losses and selling. My positions are not instantly going in the green. 10 stop loss on MEK. Okay. Okay. So let's have a look at MTM, not MTM, MEK. Not the weekly, the daily chart. Share price at 10 cents. Let's have a look. Let's have a look at MEK. Oh, it's finished at 9.8. So it is struggling to get above 10 cents, which is natural. For some reason, people love to sell at 10 cents. Oh, I'm going to sell at 10 cents. That's a price. Now, one of the other things people might be thinking is, particularly if they've owned it for a while and they know 10 cents is a natural resistance level, is they sell at 10 cents, buy back in a lower price, then sell back at 10 cents. So they're trading in a range. But eventually, in my opinion, the share price will get above 10 cents and then they're out of the stock. So that is one problem or one potential scenario to be aware of. Okay, so with Mika, so it's got the 10. Oh, I did get the 10.5 cents. And then there was a little bit of selling. Did we see selling on close? Let's have a look. He got to 10.5 at one point. There it is. It got to 10.5 at 353. Wish no one sold it. And yeah, people selling, but that's okay. So what I do with Mika, there it goes. It just dropped below 10 cents fairly quickly. So what I do, 10% is actually one stop loss I do 10%. So that would be around about 90 cents. So actually it wouldn't be 90 cents because I bought at 9.4. So I'll put it at 8.5 cents. I would see if also that makes sense. I want a little bit of a rebreathing room. So in fact, I would put it lower. Another thing I do is I just look at natural resistance support levels. So for instance, let's have a look at some of my charts. Let's have a look at, which one? Live 360. So I've took a position at 11.39 at 17.70, and I do have a stop loss, or my stop loss at $21, just because that's a support level. We saw the share price get to that level back in November and then bounce. So if I do see it go below $21, that could be a sign that the uptrend is coming to an end. So that's a lot of my sell or stop losses is just resistance and support levels. So at this point in time, I'm pretty highly in profit with this position. So I'm just looking at resistance and support levels. But with a new position like Mika, I usually put about 10% below what I bought. So that is typically what I do is 10%. And that would be sort of down near the 25-day moving average. So even putting it below that might be okay. Anyway, so that's what I do. Also entered Mesoblast around the same time in yourself. How I've got out when the ABC crashing got a bit too much for me. Okay, I find my way of trading unproductive, takes up too much time, more emotion involved, and usually find the trades with good FA and charts correct in the long term regardless. Appreciate the advice, Kneppy. You're a good man. Oh, thank you. Okay, so with Mesoblast, yeah, I don't like day trading. I hate day trading. It's too intense, too stressful, that sort of thing. So I look for more longer term trades. So preferably, like for Gentrack, I've been in that for 4 years. That's the time frame I'm looking for, longer term trades. Now with Mesoblast, so I did get in, I forget exactly what price, but when I saw the correction the next day, I saw that as an opportunity to buy more. So I bought more on open the next day, which was at 241. Yeah, 241. And for me, I think this was just confidence and conviction. And this sort of announcement, FDA approval, is for me a high conviction type of announcement. So I had no problem buying more at 241. So I bought at 280, I think, and then bought more at 241. And this little correction, not concerned, not even worried about this one just yet. And I wouldn't be surprised if we see the share price start to rally at any second. Not today, down 4.73%, but that's okay. You're going to see that when the share price rallies like this, you're always going to see some profit taking, but I'm not there yet with Mesoblast. In fact, I'm more likely to add to my position. If I see it for a little bit more, I'm more likely to add. Okay, that's all I have for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Yeah, that's it. That's it. Have a good day. Talk to you later. Bye.